the average sales cycle for mortgage and real estate is 6 to 18 or more months, right? So like as a marketer, like marketers can't miraculously compress a sales cycle from 6 to 18 months to 30 days. It's just not a reality, right? And so as an advisor, as a loan officer and an advisor, you can start to find out whether or not they are ready to move forward, because sometimes the consumer doesn't understand as well that they can move forward right away. Because as loan officers, we have this thing, I like to call it the curse of knowledge, right? Where you think everybody knows the things that you know, but the reality is most consumers don't know that they can buy a house with 3% down. They think they need 20% down. They think they need 800 credit score. They think they need, $100,000 a year in income. All of these things that are sort of myths. Yeah, there's a little bit of the perpetuation from people like Suze Orman and, guys like that are kind of saying, oh, you have to do 20% down, 15-year mortgage. But beyond that, it's instead of asking something like, hey, what's your timeline? You can say, hey, if we found you the right house with the right payment, how soon would you want to move forward, right? If everything worked out for you. That's a little bit better question than saying, hey, what's your timeline? Because that's actually going to say, that's taking all the other objections out of the way. Hey, I understand that you don't think you have enough money. I understand that, you don't think you have the right payments, whatever. But if we could get you that house and you don't want to move, and then you can figure out and start to dig deep into, hey, what is their situation? Maybe they do have, a 401k they can access funds from. Maybe they can borrow gift funds from a relative, something like, or maybe not borrow. Sorry, I didn't say borrow. Gift funds, get gift funds from a relative. So, stuff like that the consumer doesn't know, right?
Right. So do you find Facebook to be still the best place to generate leads from?
It depends on how you run your ads. So there's a lot of ways to run ads. So like what the majority of people are doing is they're running stuff like single property. They're running stuff like homes lists, which, obviously real estate is a lot more entertaining. Real estate is more eye-catching, and that's what people want, right? People want the real estate. But the reality is a lot of times when people start to look at real estate, sometimes they look at real estate 24 months in advance, right? So they're even farther down the pipeline than if you're running mortgage-specific type ads, right? So that's one thing. A lot of times people are running short-form lead ads, which while you're going to get a lot of really, 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 really cheap leads, and I don't even really call them leads, those are really more like contacts. It's just as good as like a phone book, right? Because there's not any intent. They wanted to see the pictures of the house that you posted, right? And all of a sudden you're calling them. And they're like, who are you and why are you calling me? I just wanted to see the 35 pictures that you promised me on that ad, right? And so you have to think about that mindset of like, how can you start to shift away from that and stop thinking about the cheapest lead? So we're generating long form 12 to 14 pieces of information. We're only, delivering 620 plus leads to our clients because we realize that's really what's converting is those sorts of people that have those credit scores. Because the thing is, like, you can say 100% financing, 0 down, these things, but guess what they're going to attract? It's going to attract the people that have no money, bad credit, no income. And so you're going to get cheap leads, but they're not going to convert. And then you're going to burn out your whole entire mind, right? So, and I talk about the 3 types of ROI, right? There's monetary, there's mindset, and then there's your time, right? What's your opportunity cost of investing, having to get 5,000 or 500 leads to close one deal?
So are your clients having more success right now with the purchase leads or the refinance leads?
So, there's pre-approvals coming in. The one thing with the purchase market, obviously, is it's just so crazy. So, we have pre-approvals floating around. It's just, really about getting offers accepted and stuff like that. The refinances, generally, we're not heavy refi. We do generally do about 10 to 30% refinance. I just find the people that are, nothing against people that only do refinance, but, it's a tough thing because right now, obviously, it's great. But what happens when rates go up 1%?
They just go up they don't even have to go up 1% for this.
Right. So it just the costs go way up. From my perspective as a client, they tend to just be a little bit tougher to manage because they also have a less long-term mindset of building that pipeline for the future, which is really, right now, like if you were to start marketing right now, you're really building your pipeline for 2021, right? You're building, like, that's when you're going to start really seeing a lot of the closings happen. It's January, February, March, because we're in September, right? So, let's say generally it's a 90-day sort of window is generally what I see for people starting. Usually it's about 90 days before they start to see closings. Obviously there's exceptions, but.
So, in this, are you thinking at all about branding, or is it just really to get somebody to click the button now, or is there a strategy also, to see your brand and then see it again, perhaps, in another couple days or weeks or months?
Yeah, right now we're not really doing the branding side of things. However, that is the shift that we're making, is starting to move into, getting people to do some videos and start to do branding. And we're starting to kind of crack YouTube as well from that standpoint, just
Hmm.
because that is important, right? Like, obviously, getting a bunch of leads and all that stuff's great too, because you're filling the pipeline for today, you're filling the pipeline for 3, 6 months. But the beauty of something like branding is you're building that longer term effect of, and you're warming up the leads too. So over time, you're going to see that the leads do seem to be a better, I don't say quality, but they're a little more receptive because they've
Sure.
seen you're a person, they've seen your videos, stuff like that. And so that is certainly something that we're moving into. But, from the standpoint of, most people don't want to do videos. So I kind of stayed away from doing a lot of that video and branding and stuff like that, just because ease of use, ease of sort of getting people up and running. Most people are kind of resistant to doing videos. So
That makes total sense, Luke. So,
yeah.
do you find that loan officers do better when they're the ones receiving the lead? And because I know the mistake often made is, like you said, they get the lead, they either, wait too long to call, or if they do call right away, they don't call again and again and again. I know there's a strategy for how many calls on day
Sure.
one and day two and day three. Do you find that the loan officers have better success when they're the ones answering the phone and talking directly to the customer, or having somebody doing, you know, answering the phone, scheduling appointments, or acting as a dialer?
So that's a good question, because I've been somewhat anti ISA until, I mean, I still am semi anti ISA, really, because I've always found that the people that have the best success are the ones that are picking up the phone and calling themselves. That being said, so this is kind of the way I see it is, the very best is if you can pick up the phone, you're a licensed loan officer, you have experience, you can pick up the phone, take the application over the phone, set the expectation on when docs need to be back, et cetera, right? The second best is having someone in-house, junior LO, LOA, someone that's licensed that can kind of do the same sort of thing. They might not be quite as experienced, but they're going to have a little bit better effect than an ISA. Third best, obviously, is ISA, and that's best because obviously it's better than not calling at all. And so, yeah, there's that piece where you can do live transfers, appointments. That's one thing we're also building out right now, is a little mini call center, primarily because of how busy right now our clients have been. And even clients that have had success are just like, man, I don't have time. So we sometimes have people that are leaving, not because they're not having success or not because they don't like our system, but because they're like, right now with what's going on, I just don't have the capacity to take on another 50, 80, 100, 120 leads a month.
That's one of the problems
So
I see. I mean, we've got loan officers doing 20 plus loans a month. The mentality that do I want leads is kind of no.
right,
Should I, get leads? The answer is generally yes, because they're thinking about their future. But
sure,
how do I manage it? It's not worth it for me as a loan officer to talk to 100 people when I've
right,
got these 20 loans that I'm, closing and getting
100%.
20 more. And that's the struggle. But I think there's still a benefit to, I mean, they're the good loan officers. They're the ones that would probably do the best at converting, yet they
Right,
don't have the time to convert. So I'm
right.
trying to figure that out now.
Yeah, and that's the $1 million question, right? And that's something that I'm trying to really kind of crack as well, which is why we're kind of implementing this sort of ISA call center structure as well, because again, we found that obviously, when loan officers a year ago would have been a different scenario, because
Right.
again, the rates weren't quite as low. Obviously, they're still low, but they weren't, COVID rate low type of stuff. So it's a different scenario. But you're right. It's part of that process of, they're doing 20 loans a month and they want to grow their business, but it's like, do I give it to a teammate? And that's the other thing too, is like, sometimes people they'll have, there'll be a branch or they have a team and then they just try to throw the leads at their team, but then there's no process in place. Like, there's no one
Right.
that's assigned specifically the lead. There's no process. And a lot of times I actually see that fail when they try to throw it at their teams, because they don't have that structure. And all of a sudden it's like, oh, it's the lead's fault. And it's like, well, who's calling the leads? Oh, well, Johnny is sometimes calling them, but Johnny wasn't here, so Sam was calling, and it's like,
Yeah.
okay, well, so like who's calling? How many times are you calling? What does that look like? Who's, how many calls are they making a day? All that sort of stuff sort of falls in there. And so, yeah, it is important, right? Like, what does that process look like? And maybe if you don't have the capacity, it might not make sense, right? Because again, if you're not going to commit to the minimum of making calls for an hour, 2 hours a day, it's
That's
not
it.
worth it, right?
That's
You
right.
have to commit. Like, if you're going to buy leads from anybody, regardless if it's me or anybody else, like you have to commit to to doing the work to convert them, because otherwise you're just burning money. Like that's legit
How
what you're
many
doing.
calls? How many calls should somebody be making?
I mean, ideally they should be calling as soon as possible, right? Obviously that's not always the case. They can't always do that, but if you can call within 60 seconds is going to be the best. If you call within 5 minutes, it's going to be even better. Sorry, not even better than 60 seconds, but it's going to be 5 minutes is sort of like that. I don't know if you've read the conversion code, but one of the things he talks about is 5 minutes versus 30 minutes is a 100 times greater chance of getting a hold of someone, right? So
Right.
that's just astronomical. And especially now, I mean, it's 2020. That book I think was written in like 6-7 years ago. So I'm sure the consumer is even more savvy. We generally say 6 to 10 calls per lead, right? And so you kind of understand over time, you start to understand like, okay, here's the people that are actually qualified, the people that actually make sense to continue to follow up with, stuff like that as well, right? And so it doesn't necessarily have to be every single lead gets that many touches, but the people that you feel like are going to turn into a deal, those are the people you really want to spend the time with too. Because that's the other thing. That's one of the reasons why we stopped sending those lower credit score leads through, was just because we found that they would still spend the time spinning their wheels with these lower credit people.
Right.
And that's great. That's fine. Like do your thing there, but just realize that like a lot of times they're not going to convert, or you're going to have to put them in a credit repair, stuff like that. Or they're, they're wasting or not, they're spending time with the people. And the other thing as well is that the lower credit people tend to be more desperate. They pick up the phone in the middle of the day, all these things. Whereas like higher qualified people tend to be busy. They have jobs, families, stuff like that. And so they're not available all the time. So sometimes it does take a couple more touches to get a hold of them.
Right. So do you advise putting these leads, even though, you're not having a lot of luck on your 6 to 10 leads, do you advise putting them into a drip, or just letting them go at that point?
No, but I would say, yeah. So we always have like an automated drip as well. We get like 40 to 60% response rates from just automations. Some marketers will say, just wait for the automation to kick in and then just talk to those people. I've found that the people that win, the people that have the best success, pick up the phone, right? Like that's just the reality. Is like we can hope that automation saves the day. We can hope that ISAs save the day. But reality is those are not the conversion mechanism. That is just a tool to start conversations, right? And so ultimately, it's still the loan officer's job to make the sale. It's still the loan officer's job to pick up the phone and call the leads. Like regardless if the automation's getting the responses, whatever, like, that's super important in my opinion.
We found that a text response has worked pretty well for us.
Yep.
Because I think the customer feels a little less threatened.
Yep.
When a phone call's coming in, they're not sure who it's coming from, but then they get a text, we got your information, we'll be calling you shortly.
Yep.
And then they say thank you if they're interested, right? So we're already in engagement.
Texting is awesome. Yeah, texting we very, very heavy on texting. I think there's only about 2 emails in the whole entire sequence that we use, just because emails, there's a 4% open rate on emails.
Is that right? Wow.
I don't remember. It's something low for that sort of marketing emails. But text message, I think there's like 97% of people open a text message within 5 minutes. So texting is going to be great. But the thing about texting, calling, all of these things is you have to realize it's the specific medium that you're using too, right? Like a lot of times I see people that are like, man, the leads or whatever. And then you go look at like the way they're responding to, and they're writing a huge paragraph and they're like, here's my app link, here's my app link, here's my app link. And then like, here's all the qualifications. Just like, no, have a conversation with the person basically the same way you would on the phone. Like start asking them questions about what they're looking for, why are they looking to buy now, stuff like that. Because the reality is that's the type of medium that you're on. Is texting is just a tool really, again, to start the conversation and to drive them to a phone call. Because ultimately that's what you're trying to do is drive them into
have a conversation. Yeah. Right. So are your clients primarily loan officers, or do you also work with teams or companies?
Yeah. So it's all of the above. So we work with branches, teams, brokers, loan officers, kind of all across the board.
So when working with a branch, for example, do you so when leads are coming in, it's almost that challenge of distribution. Having a maybe the phone roll over to the next loan officer, there's that challenge. But what I've found is the management of, okay, who's actually doing these 6 to 10 calls, right? And that's where I've
I find the so generally it's if the ones that seem to have the best success, or if it's just loan officers, if it's a branch that's already used to buying leads, and that's kind of what they do, right? That's generally what I find to have the best success. It's the people that are like trying to supplement their business, or like they have a couple new guys they're just trying to feed some leads to, and then like they just kind of throw them to the wolves, don't help them out with the process. They don't tell them what to do. They don't, they're not saying, they're not following up, making sure that their guys are actually making the dials. Cause especially as a new guy, that's kind of scary to start just making a whole bunch of dials.
Right.
So there's that call resistance even that's coming up too, and we see people, they're calling 24 hours later, 48 hours later, like, well, we're not getting a hold of anybody. Well, yeah, because like you waited like way beyond the time that you're supposed to wait, especially in today's society. People are busy, people get distracted. Like someone's on Facebook and 10 minutes later they're, watching a cat video or something like that, totally forgot that they submitted their form. You know what I mean? So
I do.
You got to remember that.
So Luke, I really want to thank you for your time today. For, the loan officers that are listening, how do they get a hold of you?
Sure. I mean, probably the best way is you can email me at luke@paragondmg.com. You can find me on Facebook. Shoot me a message on Facebook. I spend probably way too much time, and not probably, I spend way too much time on Facebook working, right?
Right.
That's at least what my brain tells me.
Well, at least you have a positive attitude, because I'm seeing all these people on Facebook now all the time, and it's just polluting their brains.
Yeah. Well, and to hit on that, I think you were asking a couple of different tips as well. And if buying leads is not something you want to do, I really think that you need to really leverage social media, your profile, to tell people what you do, right? Especially right now, like people need to know that you're a loan officer and that rates are at all-time lows. Like I see a lot of these guys are making tons of, I don't want to say tons of money. They're closing lots of loans because they're just saying what they do, right? Like don't always sell, just be a normal human, but use your profile as social selling, right? You're using your medium and you're being yourself, but at the same time, you're sprinkling in, 10, 20% of the time, hey, rates are low, just FYI, I do this, I do loans, and you're gonna get business like that, and that's a free way to do something, on social media. That if you're not doing that, you're missing out on a lot of money.
Totally agree, Luke. Well, Luke, thank you so much for your time today. I look forward to getting to know you even better and driving some loan officers your way. And I appreciate your time.
Yeah, thanks, Dan. Thanks for having me. Appreciate it.
You have a great day.
You too. Thank you.